I will show you a simple and efficient strategy for trading trend lines with multiple time frame analysis. You will learn how to identify the best trend line for trading, how to spot an accurate confirmation signal, and how to enter your trade. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The best trend lines for trading will be on a daily time frame. Analyzing any Forex pair, you should look for trend lines that are respected by the market at least 3 times in the past. Here in New Zealand CAD pair, we have such a trend line. You can see that we have a falling trend line that the market respected multiple times. You can see that 1, 2, 3 times in a row the price already bounced strongly from that trend line, and you can see that today we have another test of that. The test of that trend line provides a very nice buying opportunity for us. But to not be caught by a trap, to not be caught by a breakout of that trend line, I suggest waiting for a confirmation signal with multiple time frame analysis. So after you see a test of a trend line that you spotted on a daily time frame, start analyzing an hourly time frame, and on an hourly time frame look for a signal. Here's what we see on an hourly time frame. Your confirmation signal will be a clear sign of strength of the buyers. To identify the sign of strength of the buyers, I suggest analyzing a price action and candlesticks. The first thing that you should note is that the pair was falling sharply, and you can see that the price formed a high momentum bearish candle. This high momentum bearish candle was formed because of a strong selling imbalance. Selling pressure was very strong, and for that reason the prices were falling. But look what happened when the price tested our trend line. The market stopped falling, and moreover the market started to consolidate. We started to form very weak candles. It suggests that buyers started to buy from that trend line, and from that trend line we see a strong buying interest, and because of that the excess of the market supply was finally absorbed, and that was the signal for the market to stop falling. The market started to consolidate. And look what happened next. The market started to respect a minor horizontal resistance. You can see that here was a minor resistance that the price started to respect, and we saw minor bearish movements from that. You can see that it was a local resort for the sellers to sell from. And you can see that now the price is breaking that. It shows us that now the price is growing because of a buying imbalance, and the fact that we are breaking above that resistance suggests that buying pressure is now way stronger than the selling interest. The only confirmation that is missing is the close of that candle. Remember that smart money may easily manipulate the market, forming a bullish trap right here. So instead of buying now, I always recommend to my students waiting for a candle close above a minor structure. When we close above that minor resistance, we can execute our trade. Our broken horizontal structure will be a very perfect place to buy, and we will set our buy limit order on a retest of that broken structure. That will be the point from where we will buy after the hourly candle closes above that yellow resistance. We will set our stop loss below the lows of that consolidation, below our trend line, and we will aim at the closest strong resistance. Analyze the historic price action and find the closest strong resistance. You can see that we have a strong resistance right here. Yes, that is quite a significant intraday resistance cluster, and that can be a goal for our potential long trade. And then here's how our trade will look like. We will buy on the retest of a broken neckline. We will aim at that structure, and we will set our stop loss below our trend line. You can see that we also can play with the risk to reward for that trade, and if we want a better reward to risk ratio for our trade, we will lower our entry to increase a potential reward. So the plan is that we wait for the test of a significant trend line on a daily. After the test, we start analyzing an hourly time frame, and on an hourly time frame we look for a clear sign of strength of the buyers. On an hourly time frame we spotted a minor horizontal resistance, and we see its breakout attempt now. Once an hourly candle closes above that, we will set our buy limit order. On a retest of that, we will set our stop loss below a trend line, and we will aim at the closest strong intraday resistance. That is how we treat trend lines with multiple time frame analysis. Let me know this in the comment section. If you have any questions, let me know what else do you want to learn in multiple time frame analysis. Also, traders, learn how to trade in my trading academy. For more info, check the link in the description below, and thank you so much for watching and listening.